Looking at Abel, as I said earlier, the news flow out of that company last week, that October, November, credit sales up 60%, a very strong move higher. It closed more than 5% higher on Friday, and again today, Abel very close to the top of the top 40, adding almost another 4% today. So 39 Rand 20 on Abel. Just your thoughts on this front. Do you think we're going to see more positive momentum on the share price on the back of that news flow last week?
Evening, Bronwyn. Short answer, yes. I mean, it was trading just at the all-time high earlier today. I think it actually traded above that before coming back slightly. And what we often see when shares hit all-time highs, a lot of retail consumers and the like, they don't like it. It scares them. But in truth, it actually shows a momentum there. I think Abel can move further. I think it's going to get that run through. We've got more retail data out later this week. We've got money supply. I think this is going to help feed into that Abel story potentially and help send that stock moving stronger.
Pioneer Foods today ended up 5.5% at 52 Rand, and that stock came out with headline earnings per share, annual headline earnings per share plummeting 62%. But last week we heard that they are going to diversify their revenue streams and buy into KWV. Again, your thoughts on Pioneer, would you be buying it at these levels? And of course, in terms of headline earnings per share, the Competition Commission fine is what hit them really hard.
Yeah, and that's it. If we take that Competition Commission out and let's call it a billion, some of it already paid, some of it out of profits going forward and the like, that's a huge number. But if we take that out of it, the results look really good. They really are in good brands. They've got good space. They've got market dominance. They've got good space to grow. They've gone into brands such as pasta and suddenly become a force there in what I would consider relatively double quick time in the manufacturing space. Certainly, they're a powerhouse there. The fine and the like, I mean, in a sense, people are saying it's behind them, and I suppose certainly from an internal perspective, yes, and in terms of the cost, they've taken that hit, or at least shareholders have, and they're moving on from that. The KWV, the question everyone is saying is, well, how are they going to fund it? They've actually got a fair bit of cash on their books. They're going to use some shares, and they can probably get some debt because they're not carrying too much debt at all. So I think the KWV looks like a deal they could possibly do, and it really is turning them into quite an attractive company in terms of spread, in terms of products which are ultimately ending up in consumers' products. To the question of is it a stock that I would be looking to buy at this point, this price, short answer no, and part of that is because of the billion rand.
And looking at Hyprop, I've just spoken to Mike Riddell, the CEO of Hyprop. They're buying at fund retail for 9 billion Rand. Their stock outperforming the broader JSE All Share, up 3% to 56 Rand. Your thoughts in terms of improved liquidity, the momentum on the stock? In fact, let's expand that to listed property in general.
Look, listed property being doing very, very well. I think year to date it's ahead of other sectors. Certainly of the big three, we've got the Indy up in the high 20s, the Resi and the Finny down around the teens, with our market up around 13% year to date. It's been industrials, but second to that, it certainly has been listed property. And I think typically when you think listed property in this country, there's only really been sort of the one elephant in the room. I like Hyprop. They're smaller, they're in that space, they've got quality malls, they really know how to operate them, and what I like from them is they're very much a consumer stock because they're not so much in the office space, and they really are the Hyde Parks, the big shopping centres, and they've done very well. They've managed them incredibly well. So if you think that consumers got to continue going forward to pick up and to start spending a little bit more, not necessarily booming, but moving in that right direction over the years to go, I like the stock. I think it's a decent price, and as you said, liquidity and the like looking better makes it easier for transacting.
I've got Paul Turon from Vestact in studio. Simon, we've got, what, 2 more weeks until we go away on holiday for a couple of days. What are you predicting come year end? I know I've asked you this question, but we're getting closer and closer now, so your predictions are going to be that much easier to come to. We're sitting at 31,600 on the JSE All Share. Do you see us going through 33,000? I think when I spoke to you last, you did. You thought maybe an assault on 34, 35,000. Am I right?
Yeah, I think 33 absolutely. Our all-time high is 33,233 from May 2008. I think we're going to hit that. I think we might get to 34. If anything, time's getting a little bit tight. There's what, 3 odd weeks left. But December traditionally a green month more than anything else. So I think we're absolutely going to take it. I think we're going to hit those all-time highs and go through them and end the year above the previous all-time high.